Hi dear Forex traders, this is Chris with the weekly video analysis taking a look at the euro dollar and pound dollar potential bullish bounces with this new month of June ahead of us. Also going to take a look at the dollar yen and AUD USD, but first of all please be aware that this video analysis is intended for a global audience and may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence and contact an appropriate entity for more info on that. Also, trading for exchange is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is intended for educational and informational purposes only, and by continuing watching this webinar, or video I should say, you agree with this disclaimer and the one mentioned on Admiral Markets website. First thing, the pound dollar daily chart, expecting a bullish bounce. Why is that? Because if you look at price action, you can see a bearish zigzag indicated by the fib here. I have the fib on the very first part of that zigzag. That's part of the A right here. Then the B retraced up to the 61.8 fib, and the C has reached the minus 61.8. So typically a zigzag like that would use fibs such as the 61.8 and the minus 61.8. So for me, this bearish zigzag could be completed, after which we could expect a bullish bounce. So if I take this fib away, I'm looking for a bounce off of this area. If we fib, for instance, this last swing high, swing low, from the last bottom to the last top, you can see prices also at the 78.6 fib, or perhaps we can even use this entire swing high, swing low, but then you see that there's perhaps a bit more space down to the 50 fib before a bounce is expected. But this is a potential bouncing spot here. The gap has been closed. We've been retesting now this bottom. So from that point of view, I would not be surprised to see a bullish bounce to retest, for instance, this 155 level at first. Because if I put a fib from the very top to the very bottom, of course, a 50 fib like 155.25 could always be a resistance spot. So my goal basically of this week will be to monitor Friday's daily high and Friday's daily low and see if we get a break of one of those two levels, to see if price is making a bullish bounce or will it continue with the bearish momentum that it does have when looking at the daily candles. When looking at weekly, we can see bearish candle and basically sturdy bounce here after a strong downtrend, right? But also now regaining some bearish momentum. So that kind of a zigzag pattern here too. Monthly chart also showing a bit of a bounce, but now a big wick last week, or last month I should say, in the month of May. So there's a bit of mixed signals if you look at the weekly and monthly time frame. That's why if I look at the 4-hour chart, I would still be cautious with the bullish bounce and not to perhaps expect too much of that upside, because there is a big wick last month on the monthly candle, and therefore if we do bounce up, we could see it push and retrace part of that wick, but run into problems perhaps when it retests this top somewhere in here. I would add, for instance, a trend line like this, and anywhere 155 zone with these bottoms here could still be a bouncing spot. And then I'll have to see. We could have that upside like this, and then it depends if we make a bear flag. I would expect more upside in a break, or if we make more of a momentum to the downside, we could probably continue with the downtrend. So I'm open to both sides, and we'll let price decide whether it's bullish or bearish, how to react to this trend line. For the moment though, I would like to see a break of this 4-hour fractal to get an idea of that upside. When looking at the hourly chart, basically that 4-hour fractal is here at 153.40. From an hourly perspective, perhaps here is already an early break, but that's a bit risky compared to the fact that this is still in a downtrend channel when connecting the tops on the hourly chart like this. Pretty nice downtrend channel. So for me, an important moment right here and here with the 4-hour fractals to see if it can break through for indeed that bullish potential. If price does break through the support line, then perhaps the bullishness is not going to happen, and we're going to continue with the downtrend that we see here on this 1-hour chart. By the way, before I continue with the euro dollar, please take a look at this webinar schedule. Weekly FX recap with Nennet on Monday today. Wednesday, the expert opinion on Heikin Ashi price action. Take a look at that. Tuesday, Wednesday morning, live webinar trading and Forex strategy, looking at live charts with myself on Tuesday, Wednesday, and Thursday. We're going to take a look at momentum indicators. Nennet and I myself, we're going to take a look at 6 p.m. Central European time at these momentum indicators. This is the euro dollar, and you can see same thing, kind of a big consolidation, of course, a big downtrend, and then we had basically here this consolidation pattern. And is that consolidation pattern over, or will it continue like this, or is it indeed over and will it continue like that? That is the question. For the moment, I am more inclined to the first scenario, the upside continuation up to 117, after which I would expect downside again and price to resume back to the parity target. That is my most likely scenario. Doesn't mean that necessarily will happen. This could also happen. In that case, I'll keep an eye on this trend line, for instance, see if it can break through the 61.8, and we might fall down to the 78.6 fib or the 88.6 fib, after which we might get a bounce or indeed continue with that downtrend. So the trend line is important for downside. For upside, I'm expecting a bounce off of the 61.8 fib, as I said, to the target perhaps. So for me, if I zoom into 4-hour chart, you can see already a bit of an upside, but slow start though so far. But ultimately, we are in an uptrend here on the euro dollar 4-hour chart, but very, 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 very kind of new and fresh and just started. Therefore, from that point of view, you can see also this trend line has been broken. I would like to see price accelerate above this resistance line, for instance, like that. And when it breaks that resistance line, I would expect some upside continuation on this euro dollar. All right. Now, when zooming out, in fact, to a higher time frame, to the weekly chart or even the monthly chart, what I would be expecting for the long term, basically, is a price to retrace this particular bearish swing high, swing low that we've had, the downtrend in the euro dollar the last year, and price actually to move up to the 38.2 fib, about 118, 117. Let me check that. Yeah, about there. Maybe I have to adjust this fib a bit, like this. Yeah, around 118. That's what I would expect. So price to go up to the 38.2 fib, hit that level, and then continue basically. Or wait, I should actually fib it from here. That's why 117 it is. When looking at the weekly chart, you can see that a bit better why I use this swing high, swing low from here. Sorry, 117 is the 38.2 fib, and I would expect price to continue with its downtrend down to parity and perhaps below. All right, so that is my primary analysis at the moment. From a time point of view, we have 2 months not breaking this low. So what I'm expecting is that this month and next month, June and July, to be bullish and to push up to the 38.2 fib, but then August or September to be bearish, and probably August already, and expect the downtrend already to continue in August and continue with that in September and October perhaps, probably maybe even November, down to that parity target. That's what I'll be expecting for the next few months from a time perspective. Of course, might adjust that next month if I see that something else is going on than I expect, but this is what I think is most likely at the moment. So from that point of view, a break basically above this 110 level should mean a retracement potential to 112.50. A break above 112.50 basically means potential up to the next top, which is at 115, and ultimately a break above 115 could mean the continuation up to about 117, 117.50. So the quarter levels, I think here with the euro dollar, the 110, the 112.50, 115, 117.50, ultimately very important resistance levels. When they break those levels, we'd expect continuation to the next quarter level. And I'm expecting here, despite this bearish momentum that we see on the 4-hour chart, a upside potential for the next 2 months. All right, looking at the dollar yen weekly chart, you can see big bullish candles towering above the resistance. From this point of view, I'm not expecting much dollar weakness against the yen. Perhaps more yen weakness is more likely. And you can see, I wouldn't be surprised to see some retracement maybe of that weekly candle, but then a continuation. If I put a fib from here to here, perhaps a retracement to the 38.2 fib, could be it, 23.30 or even to 50, 123-ish, before price continues up to 125.25. That's what I'll be expecting this week when looking at the weekly chart here on the dollar yen. Just a simple kind of retracement and continuation, because this is a strong momentum, a strong dollar yen upside, and for the moment I don't see any reason why this would stop, and I'm expecting a continuation of this dollar yen upside after perhaps only a mild retracement. Last but not least, the AUD USD, kind of interesting pattern, of course, that I've been looking at, this expanding wedge basically, and that has been valid. I think we were looking at it somewhere in here for about 2 months now, but ultimately we had the upside to retest that line, but didn't break that line, so made a move down, and now again around support, basically, or close to support I should say, and I wouldn't be surprised perhaps to see a slight inverse head and shoulders. So I do think that this is still a bouncing spot at this moment to retest perhaps the 50 fib when placing a fib from here to here at about 79. All right, that's the 50 fib. So I wouldn't be surprised to see a bounce up to that 50 fib, and then we'll have to see how price respects or responds to that 50 fib. If it does break through the support trend line, then there could be a downside potential down to 74.60, which is the minus 272 target and the trend line support area. Thank you for viewing the video analysis. Hope to see you in the webinar sometime soon. Don't forget that there are a lot of news events on the AUD USD, Euro, Pound, and Dollar this week, like interest rates and the NFP non-farm payroll announcement on Friday. So be aware of that. Take a look at IMO markets in social media. Be cautious with trading, and hope to see you in the webinars, and happy hunting. Cheers.